Good morning, ladies and gentlemen. Today is the 24th of the 6th month, June 2024. My name is Pile and I will be doing market breakdown with you. It is forex and our focus is on structure trading. We are trading structures because we understand that the market moves in structures and patterns. So looking here, we have US oil. We'll start with the highest time frame, not the highest, but we use weekly, daily, 4 hour, 1 hour, 15 minutes for entries. So we'll start with our weekly time frame. If we look at it here, we have something like impulse, correction, and expecting impulse again. This part here looks like a correction that is giving us a bigger bull or rather bear flag. So that is the nature of market. The nature of the market moves in impulses and corrections. It moves like impulse, flat bear flag like this, or impulse, steeper flags, just like that. It moves like that, and sometimes it makes smaller, bigger, smaller, bigger, so on and so forth. But without diving deep into that, let us just quickly break this down. We understand that the market came down here, it gave us a correction, which is value area, which is inflection point, where the market is likely to come back and test the structure again. And it came down, correction here, and went up again to test that value area, and it came down. So we understand that the market can go up again, but we also have to bear in mind that nothing is absolute in the market. The market will do what it wants to do. We just take the signal that it gives us and trade accordingly. So the expectation now is this part that is going to do this, and the only thing that might set everything off to cause it to move to the upside is when this thing becomes longer. The longer it becomes, the less likely it will continue to the downside. It might go up to test this value area and come down, right? So at the moment, we're going to work with what we have. So looking at the daily, we realize that we had this impulse here, correction, and impulse. But if you look at this part of the impulse, it's not the same size as this one, it's shorter. So we can call this a failed impulse. It failed, make a sharp move here. Normally these moves will have a slight push to the inside, correction, which will give us an entry, then continuation. But that also did not happen. In fact, it pushed all the way past this correction here. So we're just going to mark this level here. It's a critical level that we broke above. Oh, sorry, we need the area, the level here. We broke above this level. So we're going to focus at this point where we are trading at the moment. So if we just zoom in a little bit, we'll realize that we had an indecision, we had a push to the bottom and a push back up, right? And now because of this week is so long and it doesn't piece all the way through, it actually comes and just touch this level here. Chances are that in most cases, the next candle must fill the wick before we go up, right? So, and that's exactly what happened. So let's go into 4 hours so that it can become granular with this. So we had an impulse from the downside in the value area. This is the value area. If you go to the daily and just zoom, you'll realize it is the value area. We had a break here and push up. Here we are in the same area and we pushed up. So chances are that what we're looking for is to push up into this area and possibly into this area if we don't come back from here. So let us look in the 4 hours. What does the structure look like? Let's just clean the charts a bit. We want to keep our charts clean. We don't want messy charts. We don't want a lot of indicators that will blur our visions and things like that. Sometimes less is more. The simpler, the better. So here we have that failed correction that we spoke about, that we pushed all the way up. And if we look at this as the critical area, we see if you go to the small time frame, you'll realize there's an inflection point here, which is incoherent with this level here where the correction is forming, right? And we are testing this break right here, and we are testing it with a form of correction, which is the perfect nature of the market. So we have impulse here, this correction here, impulse, and this correction. We want to move to the upside. So how can we play this one? This is how we're going to approach this one. If you look here, there's an inflection point here. It would be nice if we get a trade from here, right? Currently we have one touch. It would be nice to have this touch breaking down to this level, then going up, right? Then giving us something like this. 1, 2, 3 touch. It will be beautiful. Then we'll have a complete correction to the upside, right? So let's look at the 1 hour and see how can we play this in terms of our entries, subsequently management thereof. So the price can turn from here. It can turn from here. If it turns from here, I'll be looking to play the breakout. I'm not gonna take trade here. For me, this is better value area in terms of it carries more weight than this one. This one, yes, what can happen is that you can have a pushback, then you take a risk entry, right? And say, here's my trade. We are going, and put your stop loss here and go. And what it does, it will just take you in, right? Then go back, does this, take you out, just like this. Just to form a bigger ascending channel to this downside as to break out, to give us the third touch, to give us this angle, right? So hence we are going to wait for a better value area. This is a better value area. So we'll wait for the price to come there, and we'll have our long here. From here, better protection here. Then we can manage it up to here. We've got a risk reward of 3.5 just in this phase only, 3.5, and the move has so much potential to go even higher. I mean, if it comes down here and it gives us an entry, then there's so much potential to go higher. It's a no-brainer. It's actually a beautiful trade, you know. Let's do this. That's what I'm looking for. So I'll wait for the price to come down, and I'll wait for a break and a reversal candle of 1 hour, full 1 hour reversal candle. Then I'll have my entry like that. And if I don't get a break, I get a touch and a full 1 hour reversal, I will still not hesitate. I will still enter the trade or take the trade. So it will still be a no-brainer for me. So this is how we are looking to play the US oil. It's looking good for me. It's looking good. I love it. I love it. These are those kind of trades that just play out 99.9% of the time. I saw them played out over and over. These are my go-to type of trades. So let's look what we have here in the forex market. Euro USD. let's look at Great British Pound USD. Okay, pound dollar. If you look at it from a daily time frame, we have these key levels here, right? We have this key level here, we've got these key levels here, we've got these key levels here. So we were looking for the price to come to this value area. The price did come to that value area. We were looking for the price to commit. The price did commit. We were looking for the price to break these levels and be trading below this. The price is doing exactly that. So as long as we are trading below this, there's no possible move to the upside. It means that we are targeting the entire move from here, right? More chances that the price will break to the downside. So let's go to the smaller time frame. If you look at the 4 hour, here we are, that's what we're explaining. We cleared these levels in a descending manner. 1, 2, 3. We had an impulse. We've got this bear flag, impulse. And even the bear flag, there was a trade here. 1, 2, 3 touches. Here's the reversal candle. There was a trade right here, all the way to the downside. I definitely missed it. I saw it when it has committed already. So, but it's fine. The market does not go as fast as you think it does. It is going at the right pace, and there's no missed opportunity. The market provides opportunities now and then, all the time. So we must just manage our emotions. We must never chase the market. We must never chase the price, because remember, the market has no boundaries. It's one environment that does not have boundaries. So you have to structure and draft your psychological boundaries where you can express yourself with an element of measure and limits. Otherwise, the market is just going to cause you emotional roller coaster that you don't want to experience. So going to the 1 hour without any waste of time, we can see we come from this beautiful move here, impulse, and we broke this level here. If we look to the 4 hour, this beautiful level here, we broke it and we are correcting below it, because it's not just breaking it. We can break and break to the upside, but the question is, what is it that we're doing after breaking? Here we see we are correcting. When we are correcting, we know that we are building momentum to move to the downside. So every time we see the market correcting or forming a corrective structure, you must know that it is building momentum to move to whatever direction it is preparing to. Because take your correction as somebody who's running, right? And he has to take a break, to take a breath, to recover, so that he continue running again. So that's what your corrective structures does. So the bigger the corrective structure, the longer the run you're going to have. So we see here, let me just clear this. We see here, if we go to the 1 hour, we are in a corrective structure, right? Here we broke a touch here. We would want to form a base here to be nice. Then we go for the third touch, and we'll want to have our trade here. Break to the downside again, then we enter. Even if we don't break, if we have a doji, a follow-up candle, then we enter. So this looks beautiful also, and this is how I would play it in the 15 minutes. Oh. We want to play it like this in the 15 minutes. We are looking for this to come down here, then go up, then come down. We'll have our trade right here in this section. So yeah, let's see what the market say. But we are not robots. The market does not have to do what it normally does, and does not have to do as we plan, but we always have to be prepared. There's a saying that says success has a tendency of meeting the prepared. So that's what we are doing. We are preparing. So outlier. Now this is a trade that I'm still holding. I took it last week from here. We entered on this candle right here, right? And it was a beautiful trade, if I can be honest with you. We expected the price to come and test here. Initially I took a loss here. The price came back, formed a base, and went back correctively. Then I took an entry right here, and it came all the way, broke this level, but came up again to test this level right here, right? So what I ignored was this. I ignored this level, failing to see that we had a near miss here. We missed it again here. Chances are that we were going to break before we come back. So I totally ignored that and I paid the price. So I took a 1% loss here, 2% loss, not 1%, 2% loss here. And I did not put my trade into break even quickly, because I believed it has potential to go to the downside. However, because of I'm in good emotional stand, I understand the market. So when it came back to break to the downside and come back, I was not hesitant, despite the fact that I took a loss here. The market was giving me signal. The market was showing me that it's committing to the downside. I entered again right here. So we are still holding, and we are expecting this correction to come like this. And if it doesn't do that, I see here on a small, you won't see it in the 15 minutes, but if you go all the way to the 5 minutes, you will see it. It is showing us that, listen, I am committing to go here. It might go here. It's fine. If it commits here, I'm not comfortable. It's a little bit high risk type of trade to scale in from here. I'll be comfortable to scale in from here. This is a better value area than the one at the bottom. So yes, this is where you are. If you look at the bigger time frame, we are still way at the top. It is properly positioned, because this is the move that we want. We want to trade in the direction of the sharks, of the bank, of the hedge funds. We are not interested into 1 hour moves. We want to catch the bigger moves. Of course, we'll be managing the trade. We won't just place the trade and leave it. We'll be doing mechanical management of the trade. But these are the moves we're interested in. 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 So hence we enter at the right positions. And this is where the bias comes in. And it's going to be even more beautiful and give us more confidence if we break this level. Once we break below these levels, I'm telling you, we'll just be looking for bigger corrective structure. Then we go to the downside. So if we look at the 4 hour, clear momentum. Look at this. We thought we were going to test this level. We had this good impulse, corrective structure that failed. And now once it failed, it committed and it gave us correction right here. That's where we started having our trades. Upon correction. A correction, for us to have trades at the correction levels, is kind of mitigate risk, right? It is an insurance entry, because if you just take trades anywhere, then you can easily be taking trades where the market is turning back again. So we don't just want to take trade prematurely, but we want to have reasons why we are taking trades. You see, so a correction is to say that I'm committing. Even this, the only reason I did not take a trade here is because of this. It was closer to this high, and higher time frame also, we are at the high where we are looking for sales, not buys. So even when I see a buy signal here, I don't buy at the highs. I sell at the highs, I buy at the lows. So yes, we saw this signal. There's no way I would have got a loss here because there's no way I could have taken this trade. I saw it play out. I planned for it in terms of we are waiting for the one more leg to come to center and start selling from here. That was according to our plan. However, it did not happen, but it's not the end of the world. We just wait for the market to tell us, listen, I'm committing. This is commitment. Then we start looking for the trades here during our correction in order to be part of the second commitment. So that will be all for now, guys. This is my first video, and I hope you enjoy it. I hope things are as clear and as simple as they could be. However, don't forget to like, follow, and subscribe so that we can be encouraged to make more content. So enjoy. Best trading, guys. Bye.